Hey,
What's
Raj.
happening? Hey,
Hey,
Chris.
Raj, good to see you.
What's
Right on.
happening?
Hey, I owe you an apology. I snapped at you in that last VAR interview because I misheard a question that you asked, and I thought you were asking him a different question. So I owe you an apology. You were asking him about his personal trading, and I didn't hear that personal part.
Oh, okay. I
And
mean,
so,
I don't remember. I get snapped at all the time and I forget
my,
about it in like
my
less than
bad.
10 seconds.
It comes off as like super disrespectful on the replay. I went back and listened to it and I thought, oh, that sounds so bad. So I do apologize. I'll try
You,
not to.
you're good. I just ignore you.
No problem. Right? Are you having anything? But how's this? I took two Tylenol and opened a beer
Oh, that sounds like you're ready for a nap then.
right
Well, welcome
after
to the
today.
Misfit Happy Hour, everybody. I'm your
Everybody else, thank you for
co-host,
coming.
Ronchero, and Chris, Katie. And Chris, you want to introduce our special guest for today?
Sure. Harris is a gentleman who came up to me after a speaking engagement at a conference I had with probably a huge conference, like 1,000 people in the audience, and asked if he could take how we segment data organically in market profile and put it into artificial intelligence years ago. And
Oh, wow.
he looked like a gentleman from Back to the Future, this mad scientist. And I thought to myself, sure, why not? And everybody, all of my friends on the exchange, Harris would come every year and would have a beer and say he's getting closer. And my friends would be like, why are you meeting these guys, et cetera, et cetera. And but Harris has now spent a good many years of developing AI and is probably the most accessible person that we can talk with about AI. And he has a great Ranchi has a great bedside manner. So I think if you have any questions, he won't bark at you if you can ask like whatever. Anyway, so Harris has now created the maps that I have been posting on Twitter, and these maps are
Oh,
so freaking good. And they've been
gotcha. Okay.
right. They've been posted up now for probably six,
I,
9 months.
I agree. That is good work, Harris, and welcome. Thanks for coming
Well,
on to
thank
talk
you.
to us.
Yeah, and like any questions anybody has, I'm happy to answer.
How,
I've been trading futures since 1991 and have some interesting stories along the way. Learned lots of stuff. So I'm one of the only people that I know of that's developing AI applications for the market. That's actually been a trader for that long, understands the markets, understands finance, and also because of my earlier history, has a really firm understanding of technology.
so you were, I'm just kind of looking at the bio that Charlie gave to us. So you looks like you spent a lot of time in tech early on when really the majority of us didn't understand any of it.
Oh well, basically what happened is that back in 1975, I was interested in computers because I had taken some computer classes in college, but I hated
Mhm.
it because the only way you could run a computer program was to type it out onto punch cards,
Yeah.
and then you'd leave out a comma, and a week later they'd tell you that the program didn't load. So it wasn't for me. But then in 1975, I had like a discount coupon because I used to build computer kits, and the discount coupon was good for this new computer thing that was in Popular Electronics called an Altair. And I didn't know anything about it, so I built it. And it had 256 bytes of memory, and the lights on the front flashed. And that was the beginning. And by 1978, I got a job for the very first software publisher in the world. And they gave me the job of bringing in new products and negotiating contracts with people, to represent their software. So anybody that was writing software at that time that wanted to get their software sold had to talk to me.
Wow.
So I know just about everybody that started the computer industry as we know it today.
That's amazing. How did you find yourself there? I mean, I noticed you have a background in mathematics. Did you come from a family of scientists or mathematicians? Like, what was your background like there?
No, my family business was plumbing supplies, manufacturing
Oh,
plumbing supplies.
so you're a breakout star.
Yeah, I'm sort of a breakout star, but I left the family business and went into the software business, and then, like I said, um, basically went through a lot of stuff. I was actually there when when David Burnell negotiated the contract that started PC Magazine.
Oh, wow.
So lots of stuff happened back then, and I always knew that small computers and personal computers would be a big thing. And I also knew the internet was going to be a big thing early on also. But, all of that background fed into what happened when I started trading. And when I first started trading in the early 90s, I was looking for something that would give me an edge or an advantage somehow.
Sure.
And I was immediately drawn to futures trading. Now, I was trading from home. I was using like early versions of TradeStation, which you ran on your own computer. The internet was just getting started then. The very first internet things, they ran Mozilla, which was the first browser, and that was about it.
Yep.
Okay, so there was no way to trade over the internet. So you had to run, if you were running like systems, which is what I ended up doing, writing systems at that time that could take advantage of changes in volatility. The only way to communicate your orders was to do it yourself somehow. You could either call your broker on the phone and tell him to place the order, but that wasn't what we wanted to do. So I got one of my computer friends to write a program that communicated by modem, because like I said, you couldn't communicate by the internet then.
Yeah.
And TradeStation would issue a trade. It would dial up the modem, transfer it to the computer in the broker's office, and he would call the pit and place the trade.
Wow.
Wow.
And that's how we ran
That's
computer
cool.
systems, computer trading systems in the 90s.
That's pretty cool.
And so you were involved with artificial intelligence right at the very beginning of it. I mean, are you self-taught, Harris? Kind of, sort of?
Basically, well, at the during the 90s, I started dabbling in artificial intelligence. They had these things called genetic algorithms, and I had a friend that was trying to predict what the ES would do. Like he would wait till 10:30 in the morning, see what pattern had formed, and try to use AI to find patterns in the data going back like 10 years that matched it. And he thought he would be able to make something out of that, but it never amounted to anything because it's too complicated. It's not that simple as just finding patterns that match. But I really started getting back interested in AI in like 2013, 2014, when they started making advances, because a lot of enabling technologies happened. A lot of the reasons that AI couldn't take off is because the computer power wasn't there, and the memory wasn't there, and the storage wasn't there.
And
But the combination of the cloud and the advances in computing is what really made the difference.
In other words, now the fact that AWS or Microsoft or Google have the cloud's computing ability that you don't necessarily have to own, you just rent that ability, is that right?
Yeah, well, that's part of it, but it's also that the computers have gotten so fast, and also they figured out how to use GPUs to train things, because GPUs are sometimes 10 times as fast as CPUs on training certain kinds of models. So this combination of advances in GPUs and advances in basically computer technology, more memory in a computer, faster processors, and unlimited storage. Because don't forget about the unlimited storage. You can configure a computer on AWS that has 250 gig of memory if you want, and but besides that, you can have terabytes or petabytes of data storage, and all those things combine to enable all kinds of modeling that could never be done before.
Ready, Raj?
Yeah. So first of all, what futures were you trading, and what futures do you trade today?
Well, when I was trading futures, I was basically trading all of them. I mean, I started out with the ES, and I have my beginning trading story with the ES, just like probably everybody does. I opened my first futures account with Lynn Waldock. I stuck $50,000 in account, and I traded by intuition.
Yeah.
Took me 6 months to lose the entire account. I thought I did pretty good. I lasted 6 months.
You did well.
That's when I figured that I'd better use some of my computer abilities to start doing things. So basically, we had in the 90s, I was mostly trading the ES. But the ES, it wasn't the ES back then, it was the SPOOs. Because people that weren't trading back then don't understand how things have changed. Chris knows, but you guys probably don't. The SPOOs were trading at about $400 a share, $400.
Yep.
And each point was $500. And,
yes, but the range was like 2 handles a day.
Well, it was sometimes, but occasionally you'd get a 25 or a 50 handle day, and you could make a ton of money.
Yeah.
At $500 a point per contract. You're trading 5 contracts, that's $2,500 a point.
Yeah.
Also, if a tick was a nickel.
Right. I remember that.
Okay, so it was different. And also the commissions were different. I remember I was paying $8 a round trip.
Yeah.
And the opening hours were only 10 to 4.
Right. Yeah, there was no overnight trading.
And there was no 9:30. It was 10 to 4. Those were gentleman hours. That was nice.
Oh, yeah, it really was. And so basically, we've gone from there to where we are now. And the fact that the ES has taken over, ushered in this whole era of 24-hour trading, and also everything's electronic. So, and because everything's electronic, you're subject to bots, and bots change the world.
But time out. But because we're electronic, you get a volume footprint. You have 24-hour trading. You have more data now, and it actually enabled artificial
Chris,
intelligence. Right?
Also is that back in those days, you didn't get volume on the ES. It was like trading Forex. The only way you get volume is after the market closed. They would tell you how much volume traded that day.
Well, no, we saw it in the ring.
Yeah. Oh, yeah. The people in the pit saw it.
Right.
But the people outside didn't see any volume.
No, we would go to the bar. Hey, you're at Misfit happy hour, and the guys, would be like, "You're in the ring. You see things."
Right. Of course.
You see.
That was one of the advantages of being in the ring.
Right, and why the seats traded for what they did. Right.
Oh yeah, absolutely.
Everybody had to. It was like where everybody had to go, and so, all right. So we make the shift to electronic. I mean, you don't just start up, like everybody we talk to Jesus, and we're talking about, hey, the future is definitely AI and modeling, and Ranch was talking about the other day about what goes in the soup and things like that. Like your path on this AI has been probably how many different versions of this program that the maps have now distilled out into this final product, which I've been posting up on Twitter. How many versions have there been?
Well, it's a combination. We've had 3 different front ends, but what's behind the front end is more complicated.
Right. How many versions of that are there?
Well, there's a new version every quarter.
Right. Oh, right. Is that right? Is it like
I just like that's what I was doing last week. I was buried making new models.
So these models, they literally learn. This is deep learning, right? Can you explain the difference between? Can you explain the difference between just simple AI and deep learning to the people who are watching?
Oh yeah. That's I'm going to try not to get too technical because I don't want to lose people.
Okay.
What it comes down to is there's a thing called machine learning, and up until a few years ago, that's what everybody did. They did machine learning, and machine learning involves 80% of your time is coming up with what ingredients to put into the soup. So that's called feature engineering. So what goes into the model are called features, and almost all the time you would spend as a data scientist would be figuring out what features to use. Once you got to deep learning, it changed. And what we do now is we just give the AI models data, and we tell it figure out the features yourself. And that's the big difference, is that the AI actually figures out what's important and what isn't. And you don't have to yourself know what's important and what isn't.
I know that you're frequently surprised at how fast it learns.
Well, I get shocked by the predictions that get made.
Me too. Just to everybody out there, I've been looking at these maps for 2-3 years probably now, and at the beginning I thought that I knew more, and now I realize that the maps know more. And that's a big transition as a trader to make, is understand that the machine has a better memory and has a better ability to learn than you have feel. And you've heard Jay say when we've talked how gut feel has been the worst thing that he's ever traded on.
Oh yeah, I can vouch for that. The more you let gut feel into your trading, the worse shape that you're in.
And
I think
so,
that's true too.
yeah. And so there's an interesting transformation where you actually learn to rely on a machine that has better tools and better memory, is what Harris is talking about. And you have to put your own gut feel in the background as some sort of observer rather than the person that's making the calls.
So I have a quick question, and it's because, first of all, what you just talked about, Harris, my head is just kind of the side of it blew off there. But the question I have is, like, with this technology that the modeling that you've created, how does it coincide with what changes you've seen or compete with bots that are now running around in after hours, or just programs that come out when headlines come out and certain words get spoken, and all of a sudden you see radical changes in direction of SPY, et cetera? How does that stitch together?
Okay, well, first of all, you have to understand, from my standpoint as being entrepreneurial, I try to solve problems that the bigger players in the world don't want to solve, because you can't compete with them. If Apple or IBM or Microsoft decides to do something, you don't want to be competing with them.
Sure.
And it's the same thing with Goldman Sachs and all their friends.
Okay.
Bots have one of the things that's very important for bots is to be connected very close to the exchange. And you see, that's why they built buildings right near the exchanges.
And that's because of the speed of the transaction, right?
Right. Because a lot of it has to do with, in some cases, getting the advantage in the maker-taker thing, where the person that provides the liquidity makes a fraction of a cent, and they want to be there first.
Yep.
Okay, so there's advantage in that. But besides that, there have been enormous advantages in what we call NLP, which stands for natural language processing. It's all the AI that has to do with things to do with language, translation, reading and understanding, in some cases writing. And they've made these amazing models, and these have been the breakthroughs for the last couple of years, where computers can now basically read Twitter or Facebook, pick out which tweets or Facebook posts have to do with markets, and instantly decide whether they're bearish or bullish and make trades.
Mm-hmm.
That's the extent that they've gotten to. They have more reading comprehension than people do.
That's crazy.
The people at CQG were working with Twitter bot creators who were reading in native languages all around the world, so that if a news headline broke and it was posted up in Turkish or something in Turkey, you would get that information first. And they were considering that as an add-on news feature to CQG. I don't know if it ever happened or not, but
yeah, I've seen some examples and some demonstrations of that. I saw a demonstration where somebody did an interface into Twitter where every tweet that talked about a natural disaster would get highlighted in red, and it knew the same words that weren't natural disaster were ignored, but if it was a real natural disaster, it would show up in red, and it was about 90% accurate.
So Ranch, right? I'm looking at the NYMEX COMEX servers about 100 feet away, and I frequently get fills before my price chart feed has moved to the price where I've been filled. So, and I'm 100 feet from the servers.
That's crazy.
Right? So,
yeah.
how many miles are you from the servers where you are?
Too many. Way too many.
Do you ever take that into consideration when trading, that what you're seeing isn't what's live time?
Oh, all the time.
Oh, you do?
All the
okay.
time. Yeah. I mean, I see it happen. I can see it happen if I have level 2 up, if I have a chart up, and I can even see it in the difference between something like TradingView versus TOS. And then I can see it, more reflected in the bid asks on whatever it is that I'm trading. The bid ask is always leading what happens on the charts. So I know that there's price action happening before I see it on a chart.
Harris, does it seem right that they've prioritized your fills and the bid-ask information rather than the price feeding into the graphics programs. I guess that would be a normal prioritization, right? Your fill comes first in speed, in regards to speed.
Well, it's also, you know, you can analyze order flow with software now to a greater extent than you did before. You know, make use of the fact that some trades happen on the bid and some trades happen on the ask. Also, I've seen software that can actually measure refill rates on when the market's being controlled on the passive side. And a lot of times, you know, I don't know, Crystal, you and I have talked about it. A lot of times when the market goes up, it's constantly being sold in, but the selling has no effect because it's all being absorbed.
Mm-hmm.
So,
Yep.
you know, basically all the selling's being absorbed, and then somebody comes along and buys one contract and it goes up a handle. You know, and that can be measured also in the bid-ask spread.
So fast forward, right? Now you get this concept of like, you're going to segment data outside of time and you're going to put it into this map. It wasn't really originally a map, was it? It was just a sort of a mathematical calculation as to the probability of the range being a certain size and then the finishing point. Was that the original program?
Well, it more has to do with the nature of uncertainty. You know, there's been a lot of speculation over time about the market not being predictable, the future not being predictable, the market not being predictable. You have the random walk down Wall Street that said that the technical analysis is useless because nothing's predictable. Okay, we've disproved that concretely.
I have seen that. I've actually seen you disprove that, which has been most people won't believe that, but I can tell you that you're right there.
Yeah, there's absolutely no doubt about it, because one of the things about the AI training process is it tells you whether a model converges or not. And if a model converges, that means that there's meaning in the data. And if there's meaning in the data, that means it's not random.
And what defines meaningful?
Meaningful is whether it works on things that you haven't seen before. It's just like learning in school. You know, some people go to school and they memorize test examples, and they can go into a test and they can get high scores on the test because they memorized the test examples.
Right.
But then if you get a test that has questions they've never seen before that makes use of those concepts, they can't do any of those because they don't understand the concepts. So it's the same thing. It's the same thing in computer, when a computer's learning a model. If you don't have data that actually has predictive value in it, what ends up happening is that the model just memorizes the data.
Oh, right.
So if all you want to do is find somebody's face in millions of faces, that's fine, because memorizing is good enough. Mm-hmm. But if you're trying to predict what the market's going to do in the next few hours, it's not good enough. You have to actually have concepts that you can use, that you can try to solve problems that you've never seen before.
How many different sets of concepts are there?
We don't know. that's really the honest thing. You know, I know that our models have figured out that there's no real value in looking back more than 10 days. You know, we've tested that. Okay. So at least for intraday trading.
And
there's nothing there that's older than 10 days that's useful.
And aren't the predictions?
But what it uses in the last 10 days, no idea.
Wow.
And aren't the predictions better when they're made? In other words, fresh bread is better than stale bread.
Oh yeah, well, yeah, because basically what we're trying to do is predict probabilities. We're not, you know, it's uncertain, so nothing's 100%. So everything that can possibly happen is got some probability. It might be a very tiny probability, but it's something. But sometimes some things are way more probable than others. So what you try to do is trade in the situations where the probabilities are telling you that something is way more likely. It's never 100%, but it's more likely. Yep. Okay. And so that was my target right from the beginning, is let's see if we can predict those probabilities. The maps are just a way of displaying the probabilities so that people can understand them.
Yep. That's beautiful.
That's perfect. And so, not to change the conversation, how have you measured whether they're a success or not, the predictability of, or the results of the maps?
Well, we started, well, we started tracking accuracy, and the accuracy of the predictions. And that's turned out to be a great boon in both understanding of models, so that people can interpret them, but also in pointing to us how well things are working and whether or not we're establishing a true competitive advantage.
And so first define what would be a competitive advantage. Is that a consistency or is that just net dollar profits?
Well, a competitive advantage is if you can establish statistically. You can, and let me just say, in markets, you can never prove anything 100%. It's not possible because it's statistical. It's uncertain and it's statistical. But there are ways to measure statistically whether or not you're doing better than guessing, and how much better than guessing. Your baseline is just guessing. It's intuition.
Mm-hmm.
So if you're doing much better than guessing consistently over time, at some point it becomes significant. And then you can say, with confidence that you really have an advantage.
And remember, we had a phone call just the other day where we were talking about how sometimes people with a particular bias towards a particular strategy may confuse that bias with say an economic scenario that it's working for them, and then consider themselves skilled when in fact it's just that their bias is in sync with a particular economic scenario. And that luck, is that luck? Would you call that luck?
Well, it's very interesting because I was doing some studies a few weeks, I guess it was about 2 or 3 months ago. And I was trying to compare, we always compare our accuracy to a baseline. And, and we mathematically calculated what guessing would come out to. But I said to myself, why don't we just model guessing? We'll just generate random numbers and make it like the computer's guessing. And we'll do this a few hundred times and see what it looks like. And I was blown away because what we ended up plotting is the cycle of luck. If you can understand what I'm saying, there's actually, this invisible force called randomness or luck, and it actually has a cycle. It's not a predictable cycle. It's not like a thing where you can say it happens for 2 weeks on and 2 weeks off. But what it shows is that luck is way more streaky than anybody understands. And you can have lucky streaks that last for 6 or 7 weeks.
Mm-hmm.
And you can have bad streaks that last for 6 to 7 weeks. Doesn't mean it has to. You can have a lucky streak that lasts for a day and then a bad luck for a day. But the thing that makes it luck is that these waves of good luck and bad luck, when they finally cancel out and you watch them over the longer term, average to 0.
That's amazing.
So ultimately they cancel, but they can really fool you as a trader because anything that you're trading, you could be in a lucky streak and you could think that you found the Holy Grail.
A bad decision with good outcomes is still a bad decision.
I mean, you can think of it like a baseball player that's making soft contact and keeps getting hits because the infielders can't field the soft hits.
Yeah. Are you a Mets fan? Are you used to that?
More a Yankees fan, but I watch both.
Ron, I mean, not that it matters. I've been a Mets fan. I am a Mets fan, just from that's the way I was indoctrinated. So Harris, you graphed the progression of luck and the probability and the outcome of luck as how would you say that? As a
just as a graph,
a graph.
Basically the same way that we make predictions, I did the exact same methodology, except instead of getting the predictions from a model, I got the predictions from random numbers.
Oh, just from random numbers. Okay, right. So it's just random. It's almost like flipping a coin.
Right, almost like flipping a coin, exactly.
So
then we look at what real prediction does, and it turns out that real prediction goes up and down just like luck. The only difference is that it averages to a substantial advantage when it all cancels out rather than 0. And what that impressed on me is
time out.
that,
can you define real prediction, please?
Well, basically what our models do.
Oh, okay, right. What the maps are predicting.
What the maps are predicting, right? Exactly.
Got it.
So the point is that what it showed me is that you can't defeat this invisible force of luck. It's superimposed on everything in life. But what you have to do is manage it and last through it. But that's why you can't have 100% winners, because sometimes you're going to be unlucky.
Yep.
You go, Ranj.
I mean, I'm gonna pat myself on the back because that's what I teach. You can I mean, it's for me, it's all about finding probability and understanding that even if you find probability, you're not always going to be right. All you're doing is giving yourself a better opportunity to be right, as opposed to saying, no, this is concrete and this is the spot, right? And this is where you do this, and this is how big you do it. I mean, from a long-term perspective, the thing that gets mollified is that when you're buying in times of calamity or crisis, that over time, you just know that from past things that have happened, the probability that they will recover over time suggests that you have the right area to make a decision for something being better in the future.
That's exactly right. And it's not that people don't have advantages using things other than AI. People have had advantages for years in trading, and some of them are analysis advantages. But it takes a lot of work.
Yep.
And what I generally always thought before I started learning what AI could do, is that these advantages in trading only happened in two general ways. One is if you could do things that were psychologically very, very difficult. And secondly, if you could do things based upon having a lot of money.
Yeah.
And since most people don't have a lot of money, they're stuck with the psychologically difficult things.
Mm-hmm.
So what you end up with in a lot of cases, and I don't know what you guys find, but you end up in situations where you're looking to take advantage of unique situations when you see lots of things get to extremes.
Correct.
And you end up with lower probability trades. So you end up with trades that maybe work 20 or 25% of the time, but when they work, they're all home runs. So you end up living like a home run hitter in baseball with lots of strikeouts. And because of that, it's psychologically difficult.
Does that rings a bell, doesn't it, Ranj?
It does. However, when you're taking swings at places where you hit foul balls or you take small losses, then you still remain in the fight. So even though you have lower probability, when you find the right spot, right? Yeah.
But you have to be able to go through a streak where you strike out 10 times in a row, and
Correct.
A lot of people can't do that.
Yeah, that's fair.
And because it's psychologically difficult. But the other side of it is that you're living and dying by 1, 2, or 3 good trades a month, and if you happen to miss 1 or 2 of them, the month is shot. So there's another thing that's psychologically difficult.
That's true.
The understanding is that the machine is awake 24 hours and is mapping and learning 24 hours while we're sleeping. And that is a big advantage. In order for people to, and I'm sure, Branch, you see this with your students, right? People have to buy off on you to actually execute your strategy.
Yes.
And then when, for example, I'm teaching Harris how to ski, and I've got an hour and a half, right? That's a private lesson, right? And I'm like, Harris is on the lift, and I'm like, here, Harris, try this annihilate Harris run. He's not right. The other word is, and so Harris is probably facing the same thing with his maps, is that it takes a while for people to actually believe that the machine does do a better job of processing the data 24 hours and learning while you're sleeping of what the particular percentage probability of where it's going, and then the range associated with where it's going. And then I think, Harris, is that right, that you have classified the forecasts into a way that allows you to make a discernible sort of strategy associated with each different map?
Yeah, well, it comes from, we basically have 2 AI models. And if you want, I'll tell you the story of the 2 AI models.
Yes, please do tell the story of the 2 AI models.
Okay, well, what I'm very practical, and I look at trading like I look at any gambling game. So the same way I look at Las Vegas games and poker and other games that you gamble on, I looked at the market the same way. So, but in the market, you don't really have rules. What you're trying to do is figure out whether to take a trade or not. So the very first question that comes up in my mind is, okay, you see this trading opportunity, you think you're in a good location, is the trade worth taking? How do you know? Well, as a mathematician, I know that the trade is only worth taking if the trade has a mathematical advantage. In mathematical terms, it's called the positive expectation. But how do you know whether a trade has a mathematical advantage?
You
Well,
don't.
the only way
You don't. You don't know.
You don't know that, but you can calculate it if you know the probability of reaching the target and the probability of reaching the stop. Okay, if you know those two probabilities, you can multiply the probabilities towards how much you make and how much you lose, and that'll give you an idea of whether you actually have an advantage.
And then there's a third
You can't
probability.
guess those, though. That's what we tried to do for years. We try to guess those probabilities, and you always overestimate how likely it is you get to your target. It's amazing how badly you overestimate it. You think that it's 30% chance of reaching the target. It's really 5% chance. So anyway, by doing a model that could calculate the probabilities of the market going anywhere, you can calculate with pretty good accuracy what the probability is of reaching your target or reaching your stop. So that was the impetus of doing a probability prediction. But there was another piece to it, which I didn't realize when I started, is what happens if you don't do either? What happens if you never reach your target and never reach your stop? It happens sometimes, especially if the target's pretty far away and the stop's pretty far away. Well, what can happen is that you run into the next prediction. And the next prediction could give you different information that you would want to keep that trade anyway. Yeah, maybe the last prediction was the market's going to go down. This prediction, the market's going to go up. So it became necessary to try to predict what would be the outcome if you run out of time. You run into the next prediction. So we had to do a separate AI model to calculate what would happen if you run out of time. And that's the green line model that you see on the screen. That's actually a much more difficult model to do than the probability model. And you don't know how hard that model was to do. I had to actually make new breaks in science in order to make that model.
Did you use
it was actually an unsolvable problem for the ES.
Did you use a forest fire algorithm in any of this stuff?
No, not forest fire. But what ended up happening is I took my first shot at it and it looked like it was working fine until the ES went to new highs. The ES went to new highs and the model that was going to predict where the market was going to end up started predicting every single time that the market would go down 200 points. Every single time. It was broken. Couldn't do it. ES going to new highs broke the model. So I started doing some research. I went into Google and I started doing research. I said, well, why is this? And I found the answer is that the current state of the art in AI is that problem hadn't been solved yet and nobody knew how to solve it.
I'm out.
It took me 3 months. Took me 3 months. I actually spent 3 months reading documents that people write, the papers on the net that people write for doctorates, scouring them until I finally came up with an idea that I tried and I changed it and I solved the problem.
I mean, we frequently had that problem in technical analysis when the market moved to new highs and in the ring as well, right? You have no reference points, period.
Right, no reference points, exactly.
You get into a space. I always use this example, right? You get into a spaceship, you fly to the end of the universe, right? What's there? You get out of the spaceship. What's there? More universe? Are you back to where you started? You have no reference point. No one's ever been there.
Right, but the guys that are writing the AI stuff at Google and at Microsoft don't think about that problem because they don't care. They care about classifying pictures on YouTube and translating English into German.
And will there ever be a point that the machine is constantly learning, so that in a sense, it can only learn from what's happened in the past? What about the problem of things that have never happened before? That's essentially what you were solving in there, right?
Well, but that's the whole thing is that we're training on data going back to 2005. And the fact that it can, but it only looks at it 10 days at a time. So it looks at 10 days of data, tries to predict what comes next, and it basically learns by the same way a baby does, from a trial and error. It tries something, it doesn't work, it changes it, tries again. If it worked, then it follows the breadcrumbs. Okay, but it's learning from the past, but it's learning in the past in a way that it's learning concepts that it can apply to the future. And for whatever reason, I hit on something that allows it to make predictions 6 hours into the future. There was no saying that was going to work, and I'm sure it doesn't work for lots of things. You just can't throw anything into AI and have it predict the market. It's not easy to do.
Right. I mean, essentially, you're segmenting data outside of time. You're letting it self-define itself. That's the first step, right? So
Right.
It's a self-organizing principle, which is great. So you don't have any boundaries in regards to it has to make a prediction. It just makes a prediction when something happens. So by the fact that something's happening, that fact that it's tipping, the market's tipping its hand to the AI, which is learning from repeated situations where the market tips its hand.
Right, but it's not actually learning as it goes. It only learns when it trains. It applies its training. It's like a golfer that's played every golf course in the world hundreds of times, and then he sees a new golf course, but he knows what to do because
That's
he's
a
seen every
great
situation
metaphor.
before. And that's what it's more like. They've
Yep.
seen every situation before, but it's not learning when it sees the new golf course.
I mean, from my side, the maps have become like a wise elder person who has seen more and remembers more. And even though my gut or my whatever I'm looking in front of me on all my millions of screens says that they're like, well, son, this is what we've learned here. It's like an ancient Indian, wisdom thing where he's like, the maps, the artificial intelligence is like, we think this, no matter what the rest of your stuff says. And it's been incredibly accurate. It's the best thing I have.
Yep.
And thank you,
Still,
by the
well,
way.
like I
Thank you
said,
for
but
doing
Chris,
it.
even so, it's still affected by the cycle of luck, and not everything works all the time.
What
And
are
it's no different. It's
what are the
so interesting to see how everything reacted to the news this afternoon. Between the Fed, and right in the middle of Powell's speech, they started hitting with all these super positive Ukraine headlines.
Mm-hmm.
And so what's the accuracy of these things?
In terms of what?
In terms of, I guess, in terms of the green line, or in terms of the forecast? I guess it would be in terms of the forecast.
Well, in terms of the entire way we rate forecasts, we end up with advantages in the 30 to 40% range.
That's huge.
Now, if you could those are huge advantages.
That's huge.
Yeah, but those advantages were if you were trying to guess the forecast. If
Right.
you were gonna, if you could bet on the forecast, we could become trillionaires. Okay, you can't do that. But the idea is to try to get that, at least a part of that advantage that the forecast has, and trade it and transfer that into your actual trades.
Yeah, which is more difficult.
Oh, it is more difficult, but that's what we try to teach people to do.
Uh-huh.
So
Yeah,
Harris, give me an example of one of your. I would love to hear one of your trades. Like, do you do it once a day? How often does it
Here.
update, and do you change based on the update? Like,
Do you want me to share it? Ronch, do you want me to show you, or I can put up the.
I can't share a screen because I'm not
Here,
I'm not set up for it.
I can put up my camera. Hold on, I'll move my camera and
Yeah,
show
you can see that basically at 9:30 this morning, it predicted that we were out of gas in the ES and that you should take a short in the, I guess it was in the 43.20s. Was that where it was, Chris?
Yeah, it looks like it traded up to 43.40.
what time
Yeah,
frame
no,
is
but
that?
the one before, you can see that it went into the red zone and it said to go short there.
Here, I'll
And then
blow
it's
this.
at the
I'll
cover
make
in
it
the blue
wider.
zone. Yeah. And then again, it made a new, and like I said, that's usually a pretty dependable out of gas signal that says that we're at least going to go sideways for a while, but it turned out to be very temporary because then it made another forecast at, I guess, right after 3:30 when Powell was finishing and all this Ukraine news was hitting, and it said that we're going higher. It said buy immediately, it's going up higher.
So, Ronch, essentially what we're talking about is this morning. Here's last night where my mouse is, right?
Chris,
And so
what's the time frame? What am I looking at?
Each bar is 30
Those are
minutes.
30 minute
Okay.
bars.
Okay.
So this is overnight, right? Like, so
Yeah.
the people were definitely coming to buy them, right? And so the range, projected range is this size here.
Mhm.
And so the fact that people are buying them into the top of what the program is considered the acceptable range for that period means that people need them, right? If they're willing to pay up relative to what AI views as in this case is viewing as expensive, people need them, right? They're tipping their hand here that people need supply, especially given that we've come off the lows, the sentiment's been bad, you know, and in front of the Fed and all that stuff. And then this morning we had a breakdown right before the opening, and it was looking for a retracement from this, because you're going to get a big gap up. You got this big gap up this morning, right, with huge positive breadth. So people like HFT and all these, Steve, who's a great trader in California, and his HFT people were like, look, the breadth is huge. You've got this big gap up. You buy that first dip, and it worked perfectly, right? And they all got out. But AI, as you can see, is looking for lower prices. This is supposedly I'm guessing is, and Harris can correct me, but the wide spot of the profile in this 6-hour data segment. And so you see it comes down, and it actually trades into what is considered a buy or cheap, and then immediately goes straight up. And then once it breaks the prior 9 half-hour periods, right? It's not like on a clock where we get a new prediction, or Harris gets a new prediction, where Harris gets a new prediction. It's that when the market breaks the prior 9 bars back. So the market has to actually tell you that
the market triggers the prediction.
Right,
Chris,
not
just for a second,
time.
click on AI off and click on the UPP plot so you can see the green line by itself. See, that's the green line model that's predicting price, and you can see how it started trending up last night. That was telling you that the market was going up.
Fuck yeah.
Before it went up.
Right. And so it's still calling for higher now, but it made that prediction at 3:30. So that big run
3:30 this morning.
No, this new prediction came.
Oh, this one at 3:30, but it started predicting up, I believe, early in the European session today.
Yeah. It's been screaming up for this whole rally. It's been right on. And so the dip today down to 40, which was actually last night's low, which held perfectly, was considered cheap by the machine, and up they go. And so so Harris has made these maps, and I've posted them up on Twitter, and I hope everybody enjoys them. And they're great, you guys. They are good.
It's pretty amazing.
Yeah, isn't it cool? It's
but Chris, what you don't realize, what most people don't realize, there's a lot of nuance in there that we teach people. It's, for instance, we all know, at least Chris teaches it, and I certainly know, and I think a lot of traders know, that the market spends its time either going sideways or vertically. You know, it's either in a horizontal development or vertical development.
Yeah.
What we found is that when the AI thinks that we're in horizontal development, if we break up, it says we're going to go down, and when we break down, it says we're going to go up. It's actually predicting rotation. But at some point, as the horizontal gets mature and it goes on for long enough, it changes and it starts predicting when we break up, we're going to go up, and when we're going to go down, break down, we're going to go down. It starts going with the direction of the market. And that's what it did last night. It started predicting it, rather than fade the move up, go with the move up.
Right. So
and that was a sign that we were about to, at least on a short-term basis, break up and break the ranges to the upside.
So Ron's right. You understand there's the difference between sort of a reversion to the mean program, where we're going to fade right around some sort of moving average, and we're going to fade each, right? And then there's when the market's balanced, it's going to start to move vertically.
Yep.
And essentially that's our job, right? Is to determine whether or not we're in a fade reversion program, which I think, Harris, is that right? 85% of the time we're in a reversion program, and
maybe a little less. I think that since the elimination of the pits, it's gone down a little bit. It's maybe like 80-20 or 75-25 now.
Yeah, that's interesting, you know, because anyway, Ron, so the idea is that so 80% of the time, you're going to revert back to whatever mean that you're using, a VWAP, you know, 200-day moving average on a 1 minute or whatever you're using.
Mm-hmm.
And then the other 15% of the time is when you're dead if you're using that strategy and the market's going in. And so that's one aspect where Harris has started to look at, I think, where you're looking at the fact that the machine can predict sideways, and then the machine starts to sense that the sideways is going to go and bleed one direction from there.
Yeah, well, yeah, to my mind, and it goes back to my own knowledge of trading, is that the best opportunities come during transition periods when you're transitioning from horizontal to vertical or from vertical to horizontal. If you can catch the vertical move as it's transitioning, you get in at the beginning. Most people don't get in until it's about to end. You know, they don't notice it's going up until it's already way too late to get in when the smart money is selling already. Okay, but if you know that it's about to transition, you can position yourself long before it breaks or just as it breaks. And it's the same thing on the other side of it. If you can predict the stopping price or the place where you're out of gas and you're going to start to rotate, then you have the potential to catch the first swing of the range, which is usually the biggest swing. You know,
right?
The swing that actually establishes the range, and then you're earlier in on the rotation, whereas most people don't even notice the rotation until it's gone on for a while, and then by then the range is starting to narrow.
That's the key to the elusive selling the high.
Right.
Right there.
So
Lucci
anything
would
that
love
can
that.
give you a heads up as to when
for sure
transitions are coming gives you a big advantage.
Right. And so where does this go in the future? I mean, what would you tell people who have been out there who are like, okay, I've got the technical stuff wired. I understand macro. You know, I can read tape. I see the flaws in the current technical analysis tools. Right here, Harris, let's just go through the tools, the quickly. Trend lines, right? We all know that they're time-based, so that they serve no relative.
Well, they lag. You know,
right.
That's the problem, is almost everything that everybody uses lags.
Right,
So
same with
the best that you
stochastics.
can possibly do as a trader without any form of prediction is to accurately assess what's going on right now. You know, and that in itself gives you an advantage if you can accurately assess it, but most people can't do that even because they have their biases and they're influenced by their moods, and they watch the news, and you know, and they have opinions. So but besides that, everything lags, and if things are lagging, lagging things don't matter all the time. You know, if it's the beginning of a 6-month crash in the market, if you get in a day late, it doesn't matter. But if you're trading intraday and you get in 5 minutes late, it might mean you missed the trade of the day. So
or if you're
the
late,
shorter term you're trading, the more lagging hurts you.
Right. If you're late, you're going to suffer. You're going to have to suffer through a retracement before you're proven right.
Right. You're taking more risk also because your invalidation point is going to be further away.
Right. Right. That's the problem with building a trend following system, right? The further deeper you are into the trend, the greater the size of the retracement is to theoretically knock you out or give back your profits.
Right. And it's always the same thing, is, you know, just like every rainstorm starts with a raindrop, you know, thunderstorm and hurricane, not every raindrop becomes a hurricane. And it's the same thing in the market. You know, every 5-minute move could be the beginning of the next, you know, 6-month bear market. But, you know, most of them aren't. Most of them are just 5-minute moves.
Butterfly effect.
Right. The butterfly effect. Exactly.
So how do we take people who have never used AI and bring them along?
Well, it's a combination of them learning a different way to trade. Part of it, you know, and it's funny because I think about this a lot. Most people trade in the same way as they go to casinos.
Yes,
you know, people go to casinos with a certain amount of money. If they get on a hot streak, if they're smart, they leave.
Mm-hmm.
Or at least
And
go
what
to
does the
dinner and
casino
spend
do
some
that
money
has the
there.
advantage? The casino has the advantage. It wants to keep you there,
Yeah, for sure.
right? It wants to give you
Yep.
drinks and free food and keep you at the table because they know if you play for long enough, you'll lose back the hot streak and they'll end up taking your money.
Yep.
Well, it's the same thing in trading. Most people trade as if they knew that they had a disadvantage. You know, they're looking to get my money out of the market. I don't want exposure. Once you learn to trust the AI and believe that you have an actual advantage, you let the trades work. You give them time. Not every trade you want to let develop. If it's a momentum trade, you want it to work in reasonable time. But if it's something that needs time to work, you let it work. And what you start to realize is that all the things we do to actively manage trades don't really get us much. And if anything, it hurts. And that you're better off just letting the probabilities work.
I have seen that. I have seen that play out. I have seen that because as flow traders, you're interested in the process and you assume that the process is relevant, but in a sense, AI is like your fairy godmother of structure behind the scenes. And so the process, as Heraclitus used to say, nature loves to hide. So that the process is in fact designed to confuse you as a trader and to distract you from the structure behind the scenes, so to speak. And I would suggest your maps are the structure and that flow is
like
the
I
process.
said, it's because most people spend their time trying to manage the luck cycle, which can't be managed.
Right.
You know, they're reacting to good luck and bad luck as if it's meaningful.
Or headlines.
Yeah, well, that's part of how good luck and bad luck expresses itself. Do the headlines help you or hurt you? Sometimes they help, sometimes they hurt.
And so a lot of times your AI will say the probability is very favorable for a particular exposure, and yet the process doesn't necessarily support it. And yet somehow, I just don't understand, but somehow it's as though the process is there to make people who are trading emotionally based or on luck get involved the wrong way. It's as though we're like fish going after a shiny lure, and that the AI or something, the AI almost exists in a way to say, like, don't chase the shiny lure. This is the actual background that has a greater probability of an outcome than chasing the shiny lure. Sorry.
Yeah, well, the most important thing is to be systematic. And if you're systematic, what you start to realize is that if you do have a mathematical advantage, like we're able to create, you end up having a much more manageable way to trade because you don't have 10 losses in a row. You know, you have a decent winning percentage. And because of that, it's not that painful. You know, so you lose, you have 3 losers in a row. It's not the end of the world.
Right.
And then all of a sudden you're back to new equity highs. And that's what you want to, that's the spot you want to get to.
Yes, for real. And for most people who are learning, it's almost a transition to learn that the AI and the machine is as smart or smarter than us.
I mean, just
like I said, any information you can get that other people don't have gives you an advantage, and that's what I try to think that we're providing.
Right. And then how do you when you, Harris, you go to a cocktail party and you're like, well, yeah, I've got this black box. Right?
Well, most people at cocktail parties don't even know what trading is. You start talking about futures and they think who knows what they think, but they don't think you're talking about the markets.
Exactly.
Right. And so, I mean, Branch, how hard would it be for you to switch out of your system and to take in another thing, like a new tool?
Well, for me, I'm always interested in learning something new, and I'm always interested to see, is it something that I can use to incorporate and put it into my quiver? Is it another arrow to fit into my quiver? I mean, I'm constantly looking and trying to push at things that will give me some type of an advantage. My the things that I teach are not just set in bedrock. They have to change and evolve or they won't work. right?
And
There are basic
yes,
principles, but there are things around the subtleties that have to change, or you're toast. You
I've
have to be
watched you.
willing.
Yeah, I've watched your teaching. It's really solid. And Harris, how many people have you ever met who have done, or how many competitors do you? Is there anybody doing what you're doing? I don't think so. Is
I don't
there?
know. All I know is that when I first discovered what I discovered, like I said, AI is different. It's so different than system building. You know, I was very familiar with system building because it goes back. I go back to the '90s. You know, where you come up with these ideas and you combine indicators or however you do it, and then you back test. Okay, AI is different. What happens is that you go through this training process, and as it's training, it's also testing on data that you set aside that's unseen. And as time goes and the training goes on for longer and longer, you want both results to improve. That's convergence. You know, as it memorizes the old data, does it also improve the data it's never seen? And that process tells you whether you have something that's worthwhile. So I did it with what I had, and it worked immediately. And I said, well, this can't be right. You know, I must be making some mistake here. It shouldn't look like this. So I said, well, let me just try it with other things. I'll try it with moving averages and MACDs and God knows what. And I started throwing things into it. And every single thing I tried was, it memorized it fine, but this unseen stuff went in the other direction. It diverged instead of converging. So basically what I realized is that AI is actually not just a tool for developing things that you can use, but it's also a tool for exposing things that don't work. Now, of course, nobody that makes anything that doesn't work wants to do that.
No. I mean,
It's the same thing. It's like, you know, Chris, I remember a few months ago, or maybe it was a year ago, you asked me if we could do anything even shorter term.
right.
So I set up some tests, and, you know, right now we're training, you know, for 6 hours. So I said, well, what if I just change some easy things, and instead of training on 30-minute bars, I'll train on 5-minute bars, so that I could get out a forecast every hour instead of every 6 hours. Sounds reasonable. And I started training, and the edge started to disappear. There was still a little tiny edge, but it wasn't anywhere near what the edge was at 6 hours. And it was interesting that as I went shorter term, that the edge started to disappear. Now, it doesn't mean that we can't do something shorter term, but maybe it requires different techniques. But what works on a 6 hour time frame, if you just translate it into a 1 hour forecast, doesn't work anywhere near as well.
You see that the HFT space has been increasingly competitive, right? And those guys have their returns are nowhere near
Well,
what they used to be.
because they're eating their own.
Yeah.
Right. So the idea is that the short-term space is too competitive for us to play, like the microsecond. And so the sort of like the mid-range timeframes, those 6 hour sort of swing scalps, is that what we would call them?
Well, what it does is it pushes me to day trading, you know, trying to capture the range of the day. But, you know, since we're 24 hours a day, you really have three day sessions in a day. But that's what you're trying to do. You're trying to capture ranges.
Right. And essentially we're trying to make a living, pay the rent. So you just need to take out, you need to take out whatever 10, 20, 30 handles a day on whatever the flavor of the month is.
Right.
And I mean, the whole thing, I mean, just from my perspective of having used it, has been an incredible transition to the point now where I'm dependent on it. And I just would like to tell everybody out there that I really do think that Harris is not doing something that is not worthwhile. And that I think it's important that if you haven't seen my Twitter feed, and I do post up every morning, just check them out. And I think that you can develop some confidence in them. And you can also reach out to Harris. He'll post up all that stuff. Or Ed here, I think, is in the chat and can steer you to some of the YouTube videos that they have. And they've been, how long have you been building that? How long has it taken to build, Harris?
Well, we've been working on this since 2017.
Right.
And it's been a constant advancement, and we keep making new advances. We keep making things better.
And I can attest to that. And I don't, he never, Harris has, and I have been in contact for all these years. I have no equity stake in the maps, by the way, people, full disclosure. But I can tell you that you can, if you have any questions, reach out to Harris. He's very smart about this stuff, and he has a great bedside manner, as you can say, or as you can see. Harris, tell us about your blackjack experience.
Oh, blackjack. Well, I looked at blackjack differently than everybody else too. When I try to figure out how to beat blackjack in casinos, I studied the game, and what I figured out was that some of the hands in blackjack were way more volatile than other hands, and they defined how you did. And it turned out it was the splits and the double downs. And I figured out that if I kept track of sevens, eights, nines, and aces, I could better play the splits and the double downs. And if I could better play the splits and the double downs, that would give me a big advantage. And it turned out that was right. It was hard to do. It was hard to keep track of all that stuff and not look like you were doing anything.
And that was with multiple decks.
Well, blackjack. See, they can beat players by having too many decks and not dealing down far enough.
Right.
Because blackjack advantage comes from the cards being unusually constituted. Too much of something and not enough of something else. And it doesn't vary that much if they don't go that far down in a lot of decks.
My disadvantage at the blackjack table is after, let's say, 7 or 8 cocktails, I lose the ability to add symbol numbers. And then I know it's time to get up and walk away.
Right. The interesting thing about blackjack, though, is it teaches you about probability. And I think that people that have played blackjack a lot understand probability better than most traders do. And also it taught me about the importance of volatility.
And how did that apply?
In that a lot of knowing what to do in trading is being able to predict changes in volatility.
Fuck yeah. No kidding. No kidding.
I have to say this has been definitely one of the most fascinating conversations that we've had in here for sure, but one that I've had just generally in the last, I don't know, 5 or 6 years. I mean, this is really fascinating stuff.
Harris, so hey, sorry to interrupt, Ron. Harris, what should people learn? What should people should just learn? Should just follow the maps and learn that? Should they read?
Well, basically, what we wanted to do is we wanted to make a special offer to the people that were listening here, and for the first 50 people that sign up for free trials, we're going to do special training classes, and we're going to make sure that they know what to do.
Okay. Well, we're keeping the promos to the end. So if you want, do you want to make this the end and do your promo?
Whatever you want. I can talk for longer if you want, but there's no limit to things I can say about the market.
Can you talk about the forecasts on the side? How is it that you can tell, Ron? So if you're not familiar, there's a little dialogue box on the side of the maps, and it determines whether or not you should be a fader or look for breaks above the new high to fail, breaks below the new lows to fail, the prior lows to be taken out or the prior lows to hold. And it's all a function of the ranges and a function of the green line. Is that right, Harris?
Yeah, well, basically, I did a couple of videos. I did one video just about the zones and one video about the green line. But what it comes down to is that the same things that you know how to do with traditional indicators, divergence confirmations, you can do the same thing with the extremes of the zones and also the trend of the green line. Whether it's confirming, so like for instance, the map that you showed before with the last forecast where the green line went to a new high and the red zone went to a new high at the same time.
Yep, here I'll show people.
That's a confirmation that we're breaking out to the upside.
Okay, I can do that. I can show people.
But the same way you can get confirmations, you can also get divergences.
Somehow. I somehow, here we
While
go.
you're,
There we
while
go.
you're, yeah. Chris, while you're
God.
doing that, somebody asked in here, Dylan asked, as a younger trader, does learning how to code your own AI tools seem like an advantage going forward to supplement your trading, or is it better to just purchase a service product and not think about it? I mean, just for me, I'm nowhere near as smart, nor do I have the patience to do that kind of a thing. So after I have a conversation with somebody like Harris and realize that he's done something that I simply cannot do, and it has the type of performance that it does, I certainly don't need to expend my energy to do anything other than to learn how to use the tool. I mean,
My answer would be, I've been involved since the very beginning, and Harris is a one of a kind, and that the people who created the backbone philosophical principles that Harris has taken are some of the smartest in the industry
yeah,
to use this.
yeah,
And so even, the people who are now 80 years old are curious how, because they took the philosophical principles but they never put them into AI. Their principles were backward looking. And so Harris has taken those principles and moved them to the forefront, where you're actually having to measure reality in the present moment against the predictive future. And that's really, Harris, kudos, that's freaking crazy good.
yeah. This is pretty
Yeah.
amazing.
Well, one thing I can tell you is that one of the nice things is that all the tools that you use to develop AI are all open source. They're mostly developed by Google, who's the force behind TensorFlow, and Facebook, who's also very big, and Microsoft, who's also very big. But everything is open source. I'm surprised that Apple doesn't do more, but they don't. And also, there are a ton of courses out on the internet where you can learn from great professors how AI works. And if you want to go into the AI field, it's a good thing to do. I think what you're going to find, if you try to apply AI to market stuff, you're going to find that most stuff you can very efficiently prove doesn't work. It's very hard to find things that work. Advantages in the market are very rare to find.
Quantopian, I hate to interrupt, Quantopian had a contest where they had something like 300,000 quant formulas, and they were going to fund the top. Remember that? And they created a hedge fund, and then they went
Didn't work.
They went bankrupt.
Yep.
I went to their senior programming event, and people were just asking about what worked, and I raised my hand and I said, markets are more volatile when it's windy. And
See, yeah, I know. Yeah. Chris, what it comes down to is that the markets are very, very complicated. And they're not just complicated, but they're also very volatile at the same time as being very complicated. And because of that, you're not going to solve anything having to do with the market with simple solutions. You can't have simple crossing of lines or simple ideas and think that that's going to solve any complex, volatile situation that is driven by chaos theory. It doesn't make sense. It would be like thinking that you have like a world war going on with people fighting in all different directions, and you could solve it by playing Battleship.
And so, to answer the question at hand, it's probably easier to rent the information from someone
I'm gonna let Harris do the heavy lifting.
Right. Currently, I've been there. They've spent 5 years and all their money trying to build this thing, and they're not some giant tech firm. These are, as you can see, they're not young guys. They're retired scientists who have spent their lives trading and have built this thing. And I just happened to be the person at the very beginning who got involved. And so I'm very happy to be able to share this. Sort of, hopefully it's a Cinderella story for everybody. And so I guess Bron, do you have anything else you'd like to add?
No, I don't. I unfortunately have to wrap. I mean, I could sit here and talk with Harris for probably another couple hours, but
Yep.
I do have to wrap up.
Harris, thank you so much. Would you like to do your promo right now, please?
Sure. Well, like I said, you can, if anybody wants to try our product, it's available at aphasai.com. And that's our distributor that actually sells our product on NinjaTrader. And anybody that wants to ask me any questions and also wants to be one of the first on the list for the special training can send email to info@andraai.com. And I think you have, Chris, you have the email and all the information that you can post somewhere so people can see it. So
Harris,
people don't
yeah,
have to imagine
people,
how to spell it.
people say great session. It's AIFSI.
No, AIFSAI.com is the website.
AIFSIA.
Yeah, let me, where should I type it? I can type it somewhere.
In the chat.
Let me type it in the chat.
AIFSIA. How do you pronounce it? Ranch, it's good to see you. And how's your back?
Back is good. Back is better.
Okay.
Rehab, it does wonders. So
That, yeah, that makes you a better trader when you feel better.
I don't trade when I don't feel well.
Right.
Step away.
And to everybody who's watching at a later date, the Fed raised rates today for the first time since 2018, probably the second time in 12 years. And so it's been a hell of a day. Thank you, Harris. Harris has been, as I say, Harris has been struggling behind the scenes and has created this product that's really wonderful. And I'm very glad that he could come, and he is brilliant. And I suggest that anybody who's curious, watch his videos and reach out to him. And I can help you with contact if you need it from me. And I think, you know, there's very few people in the world who use it, and its success rate, it's the best thing I have. And I've been in the business for 40 years.
Yeah, that says a lot.
Yeah. So Harris, I can't thank you enough for all the work that you've done. And I know you've struggled, and it's hard to have people believe you, but I would encourage them to at least explore it for themselves. And I think, again, can't lose.
Well, that's the thing, Chris, is that you should never take anything that anybody tells you in trading as total face value. You got to always check things out for yourself.
Absolutely.
So I would never tell you to do that with me or with anybody else.
And so I fully 100% recommend him and his program, and I do not have an equity stake in it. How's that? So thank you all for coming to the Misfits happy hour on the Fed.
That was great.
This historic day. Hopefully, Harris, will you come back again?
Oh, yeah, sure. Yeah, anytime you want. I love you guys. I like watching your show every week. And yeah, anytime you want me back, I'm happy.
Awesome. Nice to hear.
Okay.
Always have lots of interesting opinions.
And thank you for teaching people. You know, so many people write me and say that it's educational and informative and entertaining. And so Harris has just scratched the surface of his knowledge today. And if I ever teach a course, I'd hopefully have him teach the last hour or two of it, because he has an understanding of probability and has a background in trading that's really good.
Yeah,
so
that's a great idea.
Yeah. Thank you, Harris.
Thanks, Harris.
Thanks so much, guys.
All right. Have a
Bye.
good one.